Hitting it now. There we go. And welcome everybody to the January coaching call here. We got a little slide deck. Mike and I will go over here, talk a bit about things. Should we talk a little bit about interest rates, or do you have that in the deck?
I mean, you could start. I got something in the deck too I could share.
Perfect. Yeah, I mean, interest rates right now are high because of the bond market, right? And the appetite for debt is not, for the 10-year treasury bond is not too high. So the interest rates are not going in a great direction for us for the early spring, but I think you and I are going to talk about, we anticipate it getting better in the second quarter, probably, and third quarter for sure, as far as rates, just because the Fed's going to have to they're going to have to reinstitute QE, and they're going to have to buy down these treasury bonds just because we have 1.9 trillion. Basically, we're a $2 trillion budget deficit for 2025, plus we have 3 trillion in T bonds coming due that we have to refinance here this year in 2025. So the Fed's kind of, painted itself into a corner here. All right, here you got the mortgage rates up here. Perfect.
Yeah, this one's more forward-looking view, and kind of like talked about some history too. So it's a good article on Housing Wire I saw over the weekend. I figured I'd share, and they're basically saying, how this 2 years into it now and probably ongoing, about 6-7% interest rates, mortgage rates are going to change the housing market for a decade. And I'll kind of like jump around the article here, some good charts, but majority of homeowners with mortgage rates over 6%. This is kind of a chart here. It is going from, I think, is it 2013? So 10 years of history, basically, a little bit more.
Yeah.
And here's the legend. The light blue is less than 3. 3 to 4 is navy blue. Pink is 4 to 5. 5 to 6 is red. And then like a dark red is greater than 6. And it's kind of cool to see the last 11, 12-ish years. I mean, if you look at it now, what you consider cheap, I guess, they're looking at anything this line here, probably under 6%.
Yeah.
Essentially. Actually, yeah, anything under 6% makes up over about 80% of mortgages, which is insane today.
That is crazy.
And the majority, the two biggest tranches are the less than 3s and then the 3 to 4.
3 to 4, yeah.
However, as you can see, there's pressure going downward with that group because of life happens, right? You can't hold on to these mortgages forever. But I think I'll share the article on the site. It kind of goes into the story of, in the last decade, more and more homeowners financed their, purchase of their mortgage rates in the low 4s. And they're going to hold on to these homes longer and resell them because, for the same house, same square footage, even same price, when you have a 3% versus a 7%, it's a huge monthly difference. And that's what most people shop on.
Yep.
So that's a lot of good information that I could drop it into post here. But I thought this chart was a cool chart, essentially, of kind of like where we're at today and we were at the last 10 years when you bucket people into different interest rate groups and tranches.
It is a good chart. That really shows. It's just amazing how many are under 6.
Yeah.
Truly amazing.
But the article went into like recency bias. Now, once people get used to the new interest rate, right?
Yeah.
They'll learn to, that's reality, right? And if housing prices remain flat and not rise as much like we saw in 20, 21, 22, that'll be good news too, because then I'll allow wages to catch up too.
Yeah.
Affordability thing kind of like will get back to a better spot a year from now, essentially.
Yeah,
so, Mike, you and I talked about that Fridays. The biggest thing is
at lunch.
It's wages versus home prices. So wages have got to catch up.
Yeah.
Yeah, if wages catch up, and if we get a nice bump in wages, that's gonna obviously make housing more affordable, and that's basically what needs to happen.
Yep.
So we're probably not going to get any kind of major lift off. What are we, a 4 or 5% return last year? We're probably not hitting that this year.
Oh, from a housing price perspective?
Yeah.
This was trying to like, I hope it doesn't almost. Like, I'd almost want it to be flat and catch up and let people.
Agreed. Yeah.
Yeah, that's probably what you want.
I think it's just better for the overall economy, like for home ownership.
Yeah. Keep the prices flat. Hopefully rates come down and hopefully wages go up, and then you can get slow growth going into the future.
Yeah.
Yep. Yeah, I saw some things where it said like 1 to 3% was like the predicted growth.
for 25.
Yeah, that
Yeah,
makes total sense. Yeah, that would be in line. And, whereas places with less inventory, like the Northeast and parts of the Midwest, they'll continue growing. Places with lots of inventory, like Texas, Florida, and different other markets, California, they'll slow down and go backwards, but it'll balance
yeah,
out.
yeah.
All right. Some more just fun data facts, a lot of good charts here. Again, we just talked about this. US single family home prices just continue to go up like a rocket ship. Hopefully that kind of starts kind of see here the year over year peaks. This is all the seasonality within the year.
Yep.
You're starting to plateau. That's the kind of what we were talking about there. So that's good to see.
The COVID spike, and then, we're evening out now.
Yeah. Um, Always good data from Altos. So this is available inventory for sale the last 10 years. And you kind of see again the seasonality in the chart. Current inventory is at 624,000.
Mm-hmm.
Again, well below this is at 2020 and prior. So this is 2015 to 2020. Those were hovering around, call it 900 to 1.1 million per year on the high side. So depending on which of those numbers you pick, you're still pretty,
We're still pretty low.
yeah, 30% ish or more lower than that from an inventory perspective.
Yeah. Again, that's what keeps prices stable and maybe going up. Lower inventory. If we get more inventory, that changes things. But
Yeah, and
still
again,
not
I mean,
anticipating a lot.
these are national numbers, right? Every market's different, and we're seeing
Yeah.
it, right? Like in parts of Florida and Texas where the inventory is through the roof. In other parts of the market, houses are still, flying off the shelf because there's not enough inventory. So this is a national picture, kind of temperature of overall country. But however, with real estate, everything's local. So be mindful of your market.
Yeah, it's the truth. I mean, because here in Florida and different parts of Texas, we're at or above pre-pandemic inventory levels. So, and then up in the Northeast, way below, way below. So extremely low inventory still.
Yeah. And then this is starting 2025 with more new supply coming onto market. So this is weekly single family new listings
Hmm.
unsold. You can see each line represents a previous year. They didn't label them all. However, red is 2024, and the 45,000 is basically like the first week of January where we started off. So a lot higher. Typically in the beginning, the first 2 weeks of the year, you might have like 20 to 30,000 homes come on the market. We're at 45, so about double that to start the year, and kind of see how that progresses throughout the year, essentially.
Yes. I'm
Weekly
curious to
new
see what the
contracts
spring
pending.
market's going to be like.
What was that, Paul?
I'm really just curious to see what the spring market's going to be like with the higher rates. This is the first time in 3 years where we have higher rates going in the spring. And will that create inventory growth greater than normal, right? Just
Yeah,
or greater than we had in recent couple of years. That's all.
we will see shortly. Weekly new contracts pending. So home sales are showing no growth year over year suddenly. So this is 41 start the year 2025. We'll call it 2 weeks into the year when they republish this. It's 41,000 new sales that went pending, and that's basically the same numbers last year and the year before.
Yeah.
Um, and you can kind of see 24 mimic 23 a lot, but it was overall higher. More stuff went pending. Median price of new contracts, single family home prices are up 1.4% over last year. Again, this is just the beginning of January versus the beginning of January of last year. So a small data point. And
Yep.
here's the last 3 years to kind of show you where stuff was at. And 23 and 22 were pretty similar to start the year. 24 a lot higher, and then we're coming in slightly higher in 25 from a median price for new contracts that's coming out in the market. And that kind of ties into the story that, home prices have continued to grow over the last 5 years.
Yep.
And I think that's all the charts I really had. Just mortgage rates. Oh, no, a few more down here. Mortgage rates, 30-year notes here, about 7-ish. If you really go back to call it second quarter 22, we've been between 6 and 8 for the most part,
Yeah.
for over 2 years now.
2 years. Yeah.
So
I
let's
mean, look
see.
at early 22, Mike. This is what affected us so much because we
Oh,
were
that
in
was crazy. I mean,
lower
I've
threes.
never, I don't think we've ever seen that in, going back 50 years. The
It's
spike
never
up
happened.
had
No.
from, was that 3% basically
Yep.
to 6 in a quarter,
It was
3 months, whatever you
crazy.
want to call it. So it is, that was crazy. And
Yeah. Weird
it
year.
seems like we've kind of, new normal, call it, we're just jumping around between
Yeah.
6 and 8, the last almost 3 years now.
Yep.
Yeah, pretty much.
Mortgage applications, strong demand to start the year. Strong
Great.
there.
It's great. Great news right there.
Yeah. That means, rates didn't do anything really to quantify that. So it's just, okay, holidays are over, time to start shopping, right?
Yeah.
And then no new news on the delinquency stuff, really.
Yeah.
We continue to be, call it a slightest increase, and we're still pre-2020 levels.
Yep.
But as we're learning,
Just
I guess it's a good point too, is just on the one HUD home that we recently looked at, where a lot of financial engineering was done here during this time period of 2020, 21, 22 to keep people in their homes. And the one property we just won at auction, we had to let go because there was a lien that we couldn't get removed because uh, the person was behind on their first payment. They set up some deal with their FHA loan, right, to
Mhm. Put it
almost
in
create like a
arrears.
second mortgage.
Yes.
Paul, you know the story more. I get feel free to finish it. I just
Yeah. Yeah. And I'll tell you another one, yeah, too. I just found out, and we talked about we're going to see more of this. But yeah, what it was is basically they take that amount you're behind and put a second essentially on it, just backlog it and put it on there. And the person was foreclosed on was unwilling to sign off on that second one. If they would have, we would have been okay. It would have been clear, but they were unwilling to. So it would have been cloudy title. And who knows if we'd have been able to get them. So it
yeah.
wasn't worth our risk in it. So there's
Yeah.
another one a wholesaler brought me yesterday that's a subject to down here in Florida. And they also have the same second on there. They're not foreclosed on, so they'd be willing to sign off and do all this on it, but same basic concept here. So I think we're going to start running into a lot more of these over the next 6 to 12 months and 18 months, especially depending on what happens with the economy and people need to sell their houses or get foreclosed on. We're going to see more and more of these.
Yeah.
yeah, it kind of jives with what I'm hearing from some of the REO agents out there that they're kind of indicating, here in January, February, we're going to see kind of a big upkeep. Is that they were trying to keep them artificially low for so long, and also with the forbearances and all that kind of stuff.
Yeah.
Yeah, I joke you're driving so you can't see the chart, but essentially this delinquency line, and I'm hovering here, this light blue, folks. What it sounds like is artificially suppressed, and that's why it's flatlined for 2.5 years now. If you let natural market happen and not these government kind of workarounds to keep people
Yeah.
in homes longer, I wonder what is the old rate kind of back to where it was before, call another point or two in delinquency higher. Instead of 3%, it's 5% delinquency. I'm
I
curious
think
to
you're
see
right.
what the real number is, what the shadow number is
Yeah.
essentially.
Yeah.
Yeah, and that's also a lot of bad press too. I think about we just had an election too, so you're seeing a lot of press out there of delinquencies, home delinquencies are, increasing drastically and things like that. That's a lot of bad press.
Yeah.
Absolutely.
Same old, same old. All right, that's all I had on this
Top
one.
10 growing states. That's one to go over, I guess, right?
It's old though. It's only up to 22. So
Oh, yeah, it's all.
yeah.
Skip it.
They got to update that table.
Yep.
So that's irrelevant right now. And then
Completely.
I just went on today. They usually have it by the 10th of the month, the monthly foreclosure.
Yeah.
I guess
From
they're
Adam.
holding off a few more days because they'll probably do a full year in review. But Adam Data usually does a timely monthly foreclosure update of the previous month. But since December was the last month, they're probably doing a full blown 24 analysis, and that's probably why it's not out yet. So
Yeah.
when that does come out, I'll do a quick video on that to share some insights and share the article with y'all out there to see what they're saying.
Yes. Interesting.
That's the news I had. Paul, did you have anything else you wanted to cover?
No, I think we hit all the big topics, big things here. Again, everything's kind of similar to what it's been the last few years, except rates are just a little bit higher and inventory is still low. So it's kind of the same story. There is no crash imminent or anything like that. Obviously you know what I am really curious of, guys? The wildfires in California, how much that's going to affect real estate in other markets, because a lot of those people may leave the state and go elsewhere. Right.
That's a
So
really
where
good
do
point.
they go to? What do they go to Arizona? Do they go to Idaho? Do they go to Nevada? Do they stay there and try to, that's something we're going to have to see over probably the next 6 to 12 months here. See what goes on there. That's a lot of houses that were destroyed. A lot.
Yeah,
Yep.
yeah, it's a really good point. It's when life gives you the reset button, like you literally have nothing, and you can.
Hmm.
I don't want to use the word start fresh, but that's
You
essentially
can.
what we're looking to
Yeah.
do. Do you choose to live in a state that cost of living is extremely high?
Yeah. And it
Or
costs to build, to
yeah,
rebuild.
that's what I
How
mean.
much that's going to be.
And are you even going to get the money needed to
Insurance.
build, right? From
Yeah.
an insurance perspective,
Yeah.
I wonder how many people continue that. It's like migration 2.0, unfortunately, from
Agreed.
a natural disaster perspective, not a regulation perspective like COVID was before for California. But yeah, it's curious to see if that's going to be a giant migration pattern into some of those states and that you just mentioned, Paul.
Yeah, I'm really curious. We'll have to keep our eyes out on that and see if we notice anything. And it might not be a bad idea to have a realtor contact or two in that area just to find out if what they're seeing, like
Yeah.
over the next few months.
In the past, you
Yeah.
could use U-Haul rates to kind of see,
Right.
but there's nothing to move, so you can't even utilize that anymore
Yeah.
since some folks lost everything, unfortunately.
And a lot of insurers are not going to pay on this. And really, a lot of the insurance
Yep.
companies should be suing the state of California for their ineptitude with not having enough water, no water in the one reservoir close there, and not enough water to handle everything. So I imagine there's going to be lawsuits against the government
Yeah,
by
and then
people and the insurance companies.
and it sounds like they, meaning the state of California, like stop doing those like proactive brush fires that you do to
Yes.
manage serious stuff, which essentially happened, right?
Yeah.
Um, you don't want to get into that topic because I know it's a totally different topic politically for people, but yeah, that's you take away water and then just annual maintenance of brush fire. Sad to see everything that just happened.
It is sad, but this could be an event that flips California red because people realize this was all their policies. They screwed everything up. We cannot vote for another Democrat. I'd be really curious to see if it has that effect.
Yeah.
Or maybe no one left to
Well,
vote in the state.
Right.
well, I mean, if you look at the last election, you look at the chart, it was the California was majority red, except
Red.
for
Yeah.
like
Los
around
Angeles.
LA and things
Yeah.
like that. Yeah. Which is where most of the population is,
Yeah.
unfortunately, for that state.
Yeah. So we'll see what happens there. Lot to unfold in that market there.
Yeah. One property review. Don't remember if we did it on a coaching call or not this one.
I
So I
don't
just
think we did. No.
we did. Okay.
Yeah. Let's hit it. Let's hit it.
Yeah. So this one is in Albany, Indiana, not New York. And if we go to Zillow, kind of give you a flavor. Again, it's pending with us. Haven't closed on it yet. One at auction under contract. Nice little rancher with a garage. Well, we got 3.2, just over 1,000 square feet. And you can kind of see it's decent condition.
Yep.
Fix the door there, but maybe I can't remember new carpet or not. Just some wear and tear. I mean, this is kind of like a paint carpet type of maybe appliances type of reno.
Yep.
And that's what it looks like photo wise. And then from there, again, we won this at auction. Local agent got us more information. Let's get some comps active and sold. So it's a little like development outside of town here. And we saw some comps at 130 to 140 that looked pretty strong. This low comp of 42 was basically a sheriff sale property. So that's kind of what the reset value was at the sheriff sale. So we got comfortable with that low value. This is our subject property, so it didn't really sell. It's probably what the price they wanted that went through foreclosure process. However, few good comps. This is like a exact replica of our house, this 130. And we talked to the local agent on this one. Essentially, our house
Yeah.
is like a little bit better. You can see there's more wear and tear on the carpets. The appliances are budget white, that's probably been 15 years old, maybe, I don't know, and nothing fancy with the house. And this got 130 or 129.9. So looking at some numbers, we're the only active in that area. And then, so if we jump to some numbers here, that 129 comp that we just saw, we learned from the agent went pending in 2 days. So obviously demand.
Yep.
And the agent was thinking 125 to 129. So we essentially did as is value of 120. Let's go real conservative. Something goes wrong. We picked it up for 75. That's our buyer's premium. We should net on a quick wholesale, hopefully 2 days, right? Pending for 26K and change essentially. And that's assuming a 6-month hold here, as stuff in certain markets takes longer to sit. So that is a quick, not in this market anymore as much as like a 1 month, but like it's a quick a wholesale in the current market.
And a good price point for selling to, a first time home buyer.
Yeah. So that's if it's a deal, if someone's interested in, let us know. I don't believe we have a lender yet on this one. So
Right.
feel free to give me or Paul a quick shout, email, or through the virtual investor community here in the private chat. And we could walk you through more of the analysis if this is something you're interested in lending on. Anything else, Paul?
No, I like this one a lot. That's a 31% return on investment. And that's with us going a little bit low, 120 compared to 130K like the other ones. So
Yep.
good. Those are the ones that, check all the boxes. Look good, look solid. Have 20 plus K on the whole tail. Minimal, hopefully quickly in and quickly out. But we're accounting for longer hold times now. Mike, we should probably talk about that, right? We're going to 6 months on our hold times instead of 4 months, just to time of year one, and higher rates, and people are being more picky now. It's more like a normal market.
Yeah.
So
yeah, the quick list and sell is gone that we saw in 21, 22, 23. It's back to the 20 teens, call it, where stuff sat for 4 months and then you had to wait 30 to 60 days to close.
Yep, we're seeing that in Trinidad, Colorado, which we finally got under contract. Nashao, Missouri, we might finally get that one under contract. Again, 5-6 month time frame by the time we close. So yeah, give yourself a little bit more time for the hold. Allow a little bit more for cost just in case, at least that 10-15% buffer. And then if you want to lower your ARV and what your percentage of ARV you're looking to go after, from 75 to 70 or even 65, just be conservative, because we're in a weird market right now. And then you'll be surprised the upside. I know I talked to a couple of people yesterday, and they're like, well, we're going to do less deals doing that. Less is better for you. If you have bigger margins on the other ones, you have less work, you have less worries, you have less pressure. So it's not always bad. Sometimes less is more.
Yep. Yeah, especially
Yeah, I mean, if you have less,
go ahead.
Yeah, sorry about that, Mike. Yeah, if you have less deals that you're making a decent profit on, I mean, that's still better than, having a lot of deals and some deals you're losing on,
Yeah.
Yeah.
Agreed. You just shift with the market. Just stay in tune. Watch Altos research, Atom data. Redfin's got great data too. So there's a lot of good stuff to follow. And if you want to pick particular markets, see what things are looking like there. Where are people moving in there? Are they leaving that area? So what are jobs like? Another quick point that's going to affect us over the next 5 years plus, right, is AI, the advancement of AI, and how many more jobs that's going to take. So that's going to affect companies and where they're located, or if they're still around, if they're still relevant, right? And we've seen this in Wyoming a couple of times, Mike, right? Where a big energy company shuts down or leaves, or where a big company leaves and the whole town is for sale.
Yeah.
And it just destroys the town, especially in a small town like that where you get affected by it. If you're in a big town, big market, there's probably lots of companies there. So somebody will go from one job to the other. So keep that in perspective when you're investing in some of the smaller towns, that is something to look at, and something that could be a problem.
Yeah.
I think that's all I had on that. Any other perspectives on anything?
No, and just folks, as you watch this and you want us to cover a certain topic or property, feel free to reach out to us. We're happy to cover it on the call.
Perfect. All right, guys. We'll catch everyone in the next coaching call.
See you, everyone.